What's up everyone, it's Scotty with MoneyVest. So to give you a market update in this video, it does starting to feel a little bit like dot-com bubble 2.0. Ed Yardeni also talked a little bit about this idea, and there was a lot of charts and data that suggested a lot of the semiconductor stocks more specifically are starting to feel and behave very similar to what we witnessed in 1997, 1998, prior to the dot-com bubble bursting in 2000. So that's going to be the topic for this video. As always, if you enjoyed, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel, and the links to our Discord and Patreon is going to be down below if you're interested in joining us, and of course getting access to all the members only private videos. And of course, getting that 16% annual discount until the end of this month, and also join our Discord with over 20 plus channels available and 45 plus members only videos also available with the link down below. So this right here is the market. Nvidia to a new all-time high, Netflix pushing up over 10%. We did have Broadcom, AMD up almost 6% to a new all-time high. SMH and ASML, everything was just straight up to the upside and new all-time highs, including CIBR, that's our cybersecurity ETF. That is the one that I mentioned. Ignore that. That's for the real estate project that I have going on for Dubai. I'm going to move that over here. And this right here is going to be CIBR, which again we started a position in, and it's hitting a new all-time high as well at well over $57. It did started to roll right back down during the day, so down to $56.33 at the moment. Now going over to the entire market again, so it was kind of like a mixed day. So we did have the NASDAQ, of course, pushing higher. S&P, it was green, I believe, towards the beginning, and then of course closed slightly down, might have been slightly lower, or might have been flat on the day. So yep, so just over 8 basis points, so didn't really go anywhere. And the NASDAQ here also up over 36 basis points on the back of semis. But the intraday candle is what's really interesting, is because we did see a lot of intraday sell-off in the NASDAQ, in the S&P 500. So that red candle on a green day definitely does suggest there was a lot of weakness intraday. So energy pushing up, comm services, technology, all of them pushing higher. But there's a lot of sectors that were selling off: materials, industrials, healthcare, consumer defensives, real estate, utilities. In the last 1 week, of course, we did have again utilities, defensives, real estate, healthcare, all of them selling off, and other sectors pushing higher. And in the last 1 month, of course, technology, comm services, healthcare, financials, all pushing higher, with other sectors obviously selling off and getting down. In the last 1 day, we had cocoa, sugar, lean hogs, natural gas, oats, everything pushing higher, with platinum, palladium, and coffee prices selling off. With Bitcoin here just over 40,000. And Ether just over 2,200 as well. So chip makers post their biggest one-year gain since 2009. So this has just been an incredible momentum for a lot of chip stocks. And once upon a melt-up, Nvidia looks a lot like Cisco in the final phases of the dot-com bubble. And the orange line is going to be Nvidia. The white line is going to be Cisco in 1998. And that, again, is kind of like very similar. Valuations also look very similar to each other and what we witnessed. Nvidia already went through a pretty significant drop from 40 down to 20 in a price to sales basis, which again is pretty significant. And it's on its way back higher, almost at 40 times sales once again. So, one could argue that this right here was already that melt up, 50% drop. And as sales have increased dramatically, even though the price is at an all-time high, the valuation is not near close to what it was back in July of I believe last year, I think, when we saw that 2022 bear market. And of course 2023 we recovered all that much, but 2022, that bear market, we did see a significant drop in Nvidia's valuation, in fact in most stocks' valuations, and it's now on its way back up. Regardless, despite the prices being at all-time high, we're nowhere near close to that 40 times sales level. And Ed Yardeni basically mentioned that he's got a year-end forecast of 50 to 5,400, well ahead of Wednesday's close, but the speed of the advance is what is concerning him. The S&P 500 may be starting a tech-led melt-up, similar to what happened during the second half of the 1990s, is also what he mentioned. And, in my opinion, what I believe is potentially going to take place is a reasonable correction to a pullback that could be somewhere between 7 to 10% drop in the S&P and the NASDAQ from its current levels. I think that's very reasonable. I think that's something that I'm expecting and I'm prepared for from the markets. And of course, moving forward, when it comes to the dot-com bubble bursting, that 2.0, like that type of analysis, I think that is not going to be similar, because back in the dot-com bubble and of course the internet bubble, we did have a lot of valuations, a lot of stories without any revenues and fundamental backing. with Nvidia, with with the likes of AMD, with the likes of Apple and Microsoft and Google and Meta, like all these companies, they've actually got very solid, very established businesses right now. And for that very reason, I don't expect this huge melt up of 50 to 60% because at some point there's going to be that valuation floor. At some point there's going to be a level where most investors are going to see these prices, they're going to start drooling over them, and money is going to start flowing back into equities because they are cheap relative to other options out there. They're cheap relative to their own earnings and revenues and whatnot. So this idea of this dot-com bubble 2.0 is somewhat flawed because things have changed. These companies are a lot more established, a lot better in terms of their fundamentals and financials versus what we witnessed back in early 2000s and late 1990s. So that is something to keep in mind. Are the valuations expensive? Yes. Are the technicals overbought? Yes. Could there be a pullback of 7 to 10%? Possibly. But is there going to be a 50 to 70 to 90% drop? I doubt it. Why? Because like I said, there's going to be that valuation floor, and a lot of these are going to become very attractive the moment they start dropping 20, 30%, and buyers will start stepping back in to buy them at those prices. Like, think about that for a second. If Nvidia were trading at low 400s, for example, how many investors do you know, or even yourself, would be interested in getting in at those prices, right? If Meta was back down trading in the 280s or 200s, how many people you know or yourself would be interested in trading or investing in that stock once again? That's the idea that I'm trying to get across, is that the revenue, the earnings are so strong for these businesses with very well-capitalized balance sheets that these companies, even if they do drop 20, 30%, which is normal, a valuation reset is okay, there's going to be some buyers that are going to step in, including myself. So that's something to keep in mind. Of course, S&P, NASDAQ still at an all-time high. We're starting to see a little bit of a pullback right now from the S&P and the NASDAQ here. Again, intraday, we did see a lot of selling pressure. So support level for S&P is going to be at 4816, 4800. So that is the level to watch. And the NASDAQ also is going to stay put down to that support, sitting roughly at around, I believe, 15,300. So 15,300 is going to be that support level to keep in mind, at least for now, all the way down to as low as this green rectangle sitting roughly at 14,006, 14,300. So that range is going to be that level to watch for both the NASDAQ and the S&P 500 as well. So that's where we are with the markets overall. And then going over to crude oil, we're starting to move back higher. We're drifting a little bit upwards. $75, $76 a barrel is where we're at for crude oil. And that next target and resistance is going to be at $80, $81 a barrel for crude oil. So this right here is going to be that level to keep in mind, with the support level is going to stay put at $72, $73 a barrel for crude oil. And volatility, of course, we're seeing a little bit of that momentum back up. So from those low levels of 12, 13, we're back up over 4.7%. Intraday, we did see that momentum back higher as the market started to roll right back down. And if you come over to starting with Apple stock, Apple was on the day a little bit flat, slightly lower, so got up to as much as 196, 197, starting to roll right back down, considering, again, the momentum's been very strong over the last couple of days. From that 200 SMA, it's pushed right back up. All-time high sits well under $200 per share, so we're starting to make a little bit of a lower high once again for Apple. But again, we're going to take a look whether it starts to pull back. Support level is going to stay put down to 190. Talking about Amazon, and Amazon here on the day also getting a little bit of that rejection at 158. I've got covered calls sitting as high as 160. Very, very precisely, I picked those strike price because that is going to be a very important resistance, and they expire in a couple weeks. So if Amazon's not able to get up to 160, that premium is going to be credited fully 100%. I want those calls to expire worthless, and that would be the idea. That would be the best trade. But even if it gets up to 160, I have no problem getting rid of some of the shares and de-risking a little bit and taking some profits off the table for Amazon. So support level is going to stay put down to 155, down to as low as 143 for Amazon. Talking about Tesla. And Tesla, I did a separate video on, so make sure that you do check that out if you haven't already. We went over the entire earnings, the analysis, the earnings call, everything that Elon Musk mentioned, and it's down a little bit close to 6% right now, trading below, of course, its support level in the low 200s. So that is something, of course, Tesla is dealing with right now. Talking about NVIDIA, make sure that you do check out the Tesla video to get a full analysis and breakdown of the company. Now, NVIDIA, incredible, insane momentum. All I'm going to do in the next couple days or last couple days here is to caution a lot of pullback potential, and I'm going to caution here for you to make sure that you understand that this is very, very overbought, overextended, valuations incredibly high, with the valuation sitting at just over $1.5 trillion. Just got to be very, very careful with this stock at the moment, including Advanced Micro Devices. They're both trading at an all-time high, and nothing seems to be stopping them right now. The buyer momentum, the sentiment is very strong, but we know at some point that music is going to stop. So that is something to keep in mind for both NVIDIA and AMD as well. Talking a little bit about PayPal, and PayPal here also selling off intraday, down almost 3%. So $63 is where we're at. 200 SMA holding at that level very strongly, but if you do end up breaking down below that 200 SMA, we're slightly lower than that, but if you do continue to sell off, $56, $57 is going to be that level. And of course, today, January 25th, is when the Innovation Day is going to take place at 9:30 p.m. Pacific. So I may be live to cover that. That's going to be around 9:30 p.m. for me here in Dubai. So I may be live to cover that event, Innovation Day for PayPal as well. So make sure that you do check out that live stream for us. And next one's going to be Visa. And Visa here continues to trade at an all-time high. Just got to be super cautious here considering how overbought it really is. And support level is going to stay put down to $245 to $250 for Visa as well. Meta Platforms also trading near an all-time high, continues to move higher, hitting a new all-time high of just under $400 per share. And the market cap now once again sitting back over $1 trillion for Meta. So absolutely incredible recovery this stock has seen. Support level is going to stay put down to 352, down to as low as $315, $330 per share for Meta as well. And of course, from its support of 275, it's rallied another 43%. It's done incredibly well in the last several days. So going over to Netflix here, so NFLX. And Netflix on the day pushing up over 10.7% with a huge gap up, of course, on the back of earnings. Resistance is going to stay put at 571, so that is going to be that next target. Support level is going to stay put down to $485 to $496 per share for Netflix here. And of course, Google on the day also moving higher to a new 52-week high of 151. And of course, up over 1% resistance. That's where we are approaching right now. That's where the level is, and support level is going to stay put inside this green rectangle between 140 and 144. Microsoft, on the other hand, also pushing up over 92 basis points to a new all-time high, well over $400 per share. Market cap just shy of $3 trillion. Just think about that for a second. The amount of milestones these companies are achieving. Microsoft, $3 trillion. Apple, $3 trillion. NVIDIA, $1.5 trillion. Meta, $1 trillion. Tesla is the only one that's kind of struggling right now. It might get kicked out of the Magnificent Seven, might only be Magnificent Six, but these companies, trillion. It's like you get a trillion, you get a trillion. It's just been so much momentum for so many of these companies. Nphase is still struggling right now. I've got an updated analysis on Nphase coming out here very soon. Just under 3% lower on the day, trading back down to $108 per share. And the plan would be to, again, of course, look at the earnings here, which are going to report very soon, and dollar cost average at better and better prices and valuations for Nphase, because long term, I still do believe this company's got a lot of potential. And Costco here is now starting to show some signs of weakness, considering that negative divergence and how overbought it really is. And support level is going to stay put down to $644 per share for Costco. So hope you all enjoyed this video and a complete update on the markets. And the bottom line is that I do not believe that the dot-com bubble, this is like .com 2.0 or anything, because of the analysis that I mentioned, the things that I mentioned earlier. But again, hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. Again, links to our Discord and Patreon is going to be down below as always. Happy investing, and I'll see you all in the next video.